Day trading is something that's completely changed my life, and over the past 7 years, I've really learned all of the ins and outs, made every mistake that you can make up under the sun, and really been able to test multiple different strategies, refine my overall strategy, and learn from my mistakes. I always tell all of my students and everyone that if you cannot grow a small account, you will not be able to grow a larger account. Hi guys, welcome back to my channel. In today's video, I'm gonna go through what I would do step by step if I had to restart my trading journey today. So if you're brand new or thinking about starting trading, or even if you have some experience and wanna take a step back and see what you could do differently, this video is gonna be for you. The first thing I'd figure out is what it is that I actually want to trade. You have stocks, options, and futures. Each one moves differently and each one carries its own risk and reward profile. Stocks are slower and straightforward. They're more liquid. You can really learn price action in the market without the added pressure, without the added volatility. You can focus on clean support and resistance levels and really learn how the market reacts to news and build a foundation for your overall strategy and journey. Options move fast and can offer bigger returns. It's an easier way to get into the market if you don't have as much capital, because you don't need as much capital invested in comparison to stocks. However, on the opposite side of that, options are a little bit more riskier, and there are more concepts and options that you will have to learn before you actually get started, like premium decay, implied volatility, and the Greeks. Futures are even faster and more volatile than stocks and options, and they can really magnify your gains and losses on either side of the market. They're not for everyone, especially someone that has yet to build emotional control in their day trading journey. When I first started trading, I started trading stocks, and I was trading stocks for about 1.5 years before I switched over to options. Trading stocks really helped me build the confidence, the knowledge that I needed to be able to get into options. Since it is a little bit more risky, I had the confidence to be able to add to my risk tolerance when I did start trading options, and it made me understand the price action a lot better. Because options is so much more volatile, that foundation that I built with learning stocks and trading stocks first helped me be able to handle that volatility while I was trading options. The next thing that I would do is get my broker and my platform set up. You want to make sure that your platform is as clean as possible. You don't need 1,000 indicators to tell you when to enter and exit a position. I'll tell you exactly the tools you'll need. Now, I am speaking from experience when I say you don't need that many indicators. I was that person. I had multiple different indicators when I first started trading, and I have really refined my strategy only to a few indicators that I utilize, and mostly understanding that price action is king. That's what you really want to hone in on when you first start your day trading journey, is that price action is king. It is going to trump any indicator that you utilize. You want to focus on support and resistance levels, supply and demand zones, and focus on being able to chart your stock properly. When you are charting a stock, you want to start from the top down approach. So you start from the highest time frame and work your way down all the way to the 15-minute, charting whatever levels of support and resistance you see, or whatever supply and demand zones that you see on the chart as well. Again, keeping it simple, you don't want to overchart your ticker. You want to make sure that you are only focusing on key levels. Another tool that I recommend that you will need to understand price action is something that is going to show you order flow. So you can use level 2 in the tape, times in sales, or you could use a platform similar to Bookmap, whatever you need to utilize to actually learn order flow. So this is the orders that are coming in, whether they're buy orders, sell orders, if buyers have control of the market, if sellers have control of the market, if there's certain levels of support and resistance where there's walls of buyers and sellers sitting on the ticker that you're watching, so that you're aware when you are in a position, hey, there's a ceiling here, hey, there's a floor here, hey, I should pay attention to this level, hey, buyers are really coming in on this stock, or we don't have a lot of volume in the market today. So order flow is going to show you all of that, and you want to make sure that you have a tool that you can understand that shows you order flow very clearly and very simply. And just going off of that tools and setup, I would have added the VWAP indicator a lot sooner in my strategy had I known how helpful it was, and making sure that I understand and gauge the direction of the stock or the direction of overall market, whether we're in an upwards trend or a downwards trend. VWAP can really help you gauge overall market momentum. So that is a ticker, and the only ticker that I would have probably added in the beginning of my journey to really simplify overall understanding of where the market is heading for the day. And the most important part of this is making sure that your broker is reliable with your order fills. So when I first started trading, I was using TD Ameritrades, Thinkorswim, and I was a scalper. So I am still currently a scalper. And when you're scalping options, or even when you're trading anything in general, you want to make sure that you're able to get in and out of your position as quickly as possible, because if there is news that comes out or an event that comes out and the market makes a very sharp move either to the upside or downside, You want to make sure that your broker can fill you in and out as quickly as possible. When I was trading on Thinkorswim, I did struggle with the fills a lot, and I switched over to Interactive Brokers, and I never had issues with getting filled. So definitely test out different brokers and see which one has better fills, and making sure that there's no lag in the fills in and out of the position, because it can really affect your overall position, your overall risk, if your broker is struggling to fill you in and out of your positions. The next thing that I would focus on if I had to start over is learning price action first. Like I mentioned earlier, price action is king. Before worrying about advanced strategies, your risk management, anything else in the market, the first thing that you want to learn is price action. Price action is the foundation of everything. Price action is where everything is derived from. Your indicators, your levels, your zones, everything is derived from the price action of the ticker that you're watching. I'd spend time studying trends, trend lines, candlestick formations, what a fake out looks like, what a wick represents. For example, if a stock breaks a level without volume behind it, usually it's a fake out. You want to make sure that there's always volume behind the market. It gives the stock a more significant move to the upside or downside. It actually provides the stock the momentum to be able to clear specific levels of support or resistance. Another example of this is if you see repeated wicks, it could signify exhaustion or potential reverse coming in the market as well. The next thing that I would focus on is starting small and gaining confidence. So when I first started trading in the market, just like any other trader, I wanted to make a lot of money very quickly, and that's just not feasible, especially if you're looking to make day trading a career for yourself. What you want to focus on is profitability, confidence, and consistency. Consistency, that is going to help you build longevity in the market. You should build the trust and the confidence you have in the knowledge that you have, in your process, in your strategy. That is what's going to help you consistently take good trades, take better trades, and learn from the mistakes that you make as you move along your trading journey. I always tell all of my students and everyone that if you cannot grow a small account, you will not be able to grow a larger account. Growing a smaller account is always going to take a lot more discipline, a lot more patience, and you need to learn these attributes as a trader to become a profitable day trader and to build that consistency in your trading. Also understanding that every trade needs a trade plan, an entry, an exit, a stop loss. If it doesn't have those three components to a trading plan, you are going to struggle. So I never used to really build out trading plans when I first started trading, and I did struggle. And now no matter what trade that I take, there's always a trading plan behind it. I always have my entry, my profit targets, and a stop loss exit when I need to exit the position and take a loss on that trade. The next thing that I would focus on is building your routine and your mindset. Having a routine is one of the most underrated parts of trading. Every morning when I started trading, I would do the same thing over and over again. I would wake up at the same exact time every morning. I would look up the news. I would find my research. I would plan out my trades. I would do exactly what I needed to do to be able to prep for the market open. Afterwards, I would go to the gym, come back to see if there was any other trades in the afternoon, and then be done with my day. Every single day was the same in the market for me when it came to my routine. After the market would close, I would review my trades, I would journal, I would see what mistakes that I made, I would learn from those mistakes and slowly refine my overall strategy to what it is currently in the market. The second part of this that's so important is focusing on your mindset. Trading is a very, very lonely career, and it can seem very isolating at times, and sometimes as traders we just isolate ourselves to be able to really focus and really hone in. So after the market, what I would do, and if I definitely do differently because I didn't do this when I first started trading, is really spend time with my loved ones, do things that I love, get outside. Do not sit in front of your charts from 9 to 4 every single day, because you are just going to implement bad habits into the market. So it's really, really important to make sure that you are having a very fulfilled life outside of the markets, and you are not just sitting there watching the markets 24/7, because you are going to deteriorate your mindset overall, and it's going to affect you negatively as you continue on in your day trading journey. So it's really, really important to know when to walk away, to know when you're mentally exhausted, to know when your mindset is not as clear as it should be, so that when you sit down at your desk, you do have a very clear mindset. You're not focused on anything but what's in front of you and following your trading plan, because if you have other things going on, it's inevitably going to impact you, and you're subconsciously not even going to know that it's impacting you while you're taking trades in the market. I'd also remind myself to avoid those common beginner pitfalls. Every trader has experienced them. You dive headfirst into the market until you start to implement over trading. Just because the market is open doesn't mean that you have to sit there from 9:30 to 4 and trade the entire time. You go from red to green to red to green, and you're mentally exhausted going into the next day. Revenge trading, trying to make back a loss even though the market may not give you a setup. If you take a loss, that does not mean that you have to make up that loss in that day. You wait for your next trading plan to hit, you wait for the next setup to hit, and if the setup does not come, you take that L for the day and keep it pushing. There's always another day in the market. There's always more opportunities in the market to capitalize. You don't want to dig yourself into an even bigger hole by revenge trading. Something else that I see beginner traders do frequently is constantly change your strategy. I would focus on, and what I have focused on personally, is finding one strategy that fits your lifestyle and continuously refining that strategy, adapting it to the constant market condition changes. Whatever happens in the market, you want to make sure that you're adaptable. You need to be able to say, hey, I've tried this strategy, I've had 30, 40 trades, and I have an average of 50% win rate. Okay, it's not working for me. Maybe I need to try something else. But you don't just take 1 or 2 trades with one strategy and they're losses, and then you're like, take a step back and you say, hey, this is not for me. No, you really need to learn how to refine that strategy, how to make it better, because that's the only way that you're going to get better as a trader. It's not the strategy sometimes, it's just the little mistakes that you're making that you're not seeing. That's why it's really important to journal and review your trades so that you can see what the mistakes are that you're making and learn from those mistakes. And that, in the end, in turn, will help you refine your overall strategy and really hone in on one and learn the ins and outs of that strategy and learn it like the back of your hand, and it becomes a lot more simpler when you sit down at your desk and get ready to take a trade. If I could talk to my beginner self, I would tell her to focus on the process first. Your goal should not be a dollar amount any single day. It should be consistency in the market. It should be learning about the market, building your knowledge base about the market, and really being able to find consistently profitable trades in the market. It's not about making 100% one day and then losing 200% the next day. It's not about doubling your account one day and then blowing the entire account the next day. That is not how you build longevity in the markets. You want to focus on small, consistent gains, managing your risk properly, and following your plans and your rules. A lot of traders give up right before they figure it out, so you don't want to be one of those people. That's exactly what I would do if I had to start from zero today. It is not a get-rich-quick scheme. It does take time. It does take perseverance. There are going to be highs and lows in your day trading journey, but it's all about how you're able to push through them and how you're able to really focus and hone in on your strategy, your plans, your discipline, and your rules as a trader that's going to set you apart. Hopefully you guys enjoyed this video. If you have any questions, comments, or concerns, go ahead and comment down below. And don't forget to subscribe to my channel. I will see you guys in the next video. Bye.